And good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Monday, August the 4th at 1:40 p.m. Pacific Daylight Time. It's been an incredible 3 days, and let me try to explain as to why I think it's pretty incredible. Over the weekend, I had presented on the weekly update that I had really expected that this minute fourth wave would likely take maybe 3, 4 weeks. Well, here we are, day three into this minute fourth wave. And the market has either completed it at Friday's low, which would have been 2 days, or has already done and basically getting ready to complete the B wave, which in one day, basically in one day. So I've been really kind of looking at this and just thinking, now, what would the Elliott labeling be? And I'm breaking it down into here. And I tried to think that could be A, B, and a C. Could be. I thought about it before and I thought, no, I really need something that's going to look a little bit better than that. And we're not getting it. Here we go on this side. 1, 2, 3, 4, 5. A of B, B of B, and then a C wave. Not going to get very much out of this. So, but again, today we were back into risk on trading. If you didn't notice, take the notice. We saw it in the VIX. We saw it in the VIX. They started to sell the VIX and sell it and sell it and sell it. They did. And they're continuing to sell it after hours. Probably just trying to kind of balance out what they've done. So here we are, slamming the VIX, buying the volatility of the underlying, i.e. Apple, i.e. AMD, Broadcom, Google, Meta, Microsoft, Netflix, Nvidia, and etc., all the way down to Tesla. Now, I don't have a problem with that. As day traders, we should be able to move in and out pretty freely and make some decent money, and actually did it in the first hour of trade this morning. I said, thank you very much. Going to take the rest of the day for myself, or go do something else. Or maybe there are many people that can only trade that first hour and they're off to work. Whatever the situation may or may not have been, that first hour provided a full, in some cases, a full week's worth of money, day trading. And here we are now trying to figure out, well, on as far as this B wave goes, we took out 382, we took out 50%. I've already removed them from my chart. We're now breaking above the 200, the hourly 200 moving average, and quickly approaching 23,433, right? It's less than 100 points away. And that's the 618. That's the target, basically, for the B wave. Can we go higher? Of course we can. In fact, I can, and within the B wave, yes, we can. But as I said, I'm counting this as 5 waves down. I'm not looking for a flat structure. I can accept 786, but that's it. If it goes beyond that, then this completed the ABC, and I'm going to have to put it down there as a 4, and we're off to the races, and we're putting in wave 1 of minute wave 5. Now, what does that do for the overall larger picture? Remember, in this larger picture, we're looking for minute wave 5 up to not only complete minute wave 5, let me just go back out to my weekly, to complete minute wave 5, but minor wave 5, intermediate wave 5, and cycle wave 3 here in the NASDAQ. That's pretty quick considering that a lot of algorithms, when you run through the models and it goes and it scrapes all this data, is projecting that we should continue to surge higher, possibly through December. Well, we're barely at the beginning of August, and we're now dropping possibly into minute wave 5. I really do want to say no. And now I'm going to back up because I'm doing this on purpose, by the way, to prove kind of the point that I think I get from a lot of people. We have to be very careful about counting too fast. This whole thing should take a lot longer than what we're witnessing. 2 days for the whole four, 2 days for the A wave, maybe. But if I drop these a degree, it's going to drop the minuet degree down to a sub minuet degree, sub minuet wave A of minuet wave A. This could be a B wave, a sub minuet B wave within the minuet A wave. And then what we get is an A, B, C. Then we mark that minuet wave A. Then we get another B wave. Then we get another C wave. So I think that's how I'm going to also view this. But please understand, I'm not saying that this is what's going to happen. But if we're thinking on time factors, that's one way where we get that a little bit of extension of time that I know the algorithms, when we're feeding it, like what does it look like? What do you think? Um, could also be considering the Fibonacci time cycles. So maybe it is taking it down a degree, and it will take longer because we're whipping through this. We are whipping through this. So let's just by chance say that it is A sub A, get a sub B, maybe it comes up to here, maybe even up to here, and then we flip back down, put in a new low below that fifth wave. I need to get it out of this style because I need to get my extremes. So we get down there, we come back up, we come back down, and we then get a C wave, but it's C wave, it's a sub minuet C wave of minuet wave A. So we're breaking it down and lowering the degrees, to even a more finite degree. And this was interesting, by the way, not to interrupt. Palantir earnings blow past Wall Street stratospheric expectations. Pretty interesting. Those of you that were watching right after the bell, right after the closing bell, we saw this surge and then it dropped back down. And that was Palantir. That was their pretty crazy earnings report. So the algorithms are reacting. The algorithms are in charge of trading. And now they are still selling volatility. Down and down she goes. Where she stops, nobody knows. So again, but there's a part of this now let's talk about gamma, delta, volatility, everything that happens along that. It's not incredibly unusual to kind of see after two large expirations back to back, right? We had that July end of the month, and then we had the Friday, August the 1st. Two, what ended up being large moves down. What was happening inside of that was a lot of function accordingly to that expiration, where things were going to get pinned, what positions were no longer of value and were closed or expired worthless. Others, we saw possibly how, a lot of puts kind of came into the picture. Calls dropped out, puts came in. Dealers, right, which is like the market makers, the ones who have to make the market to provide all of these, the markets for the options, are jumping back into action, closing positions, reestablishing positions, moving positions, etc. and they're collecting all the way down. So it has nothing to do with about being bullish or bearish. And yes, part of the reason that we dropped is because of what happened on Friday, the unemployment numbers, what just the statistics, the revised reports that they kind of had to come out and say the words from the president, the tariffs, et cetera, et cetera. Yeah, that all has. But when it comes right down to it, it's a function of gamma. And I'm going back to the options trading because that truly is what gets in control. And why? Because of the options being so involved, not only in the Mag 7 individual stocks, but in the ETFs, in the Qs, in the spiders. They are trading heavy, heavy duty options. And so, for example, today, I noticed this morning, and in fact, I put it out this morning, that we needed to watch the volatility trigger in the Qs. The market started out below the volatility trigger. And I thought to myself, okay, I got to pay attention because if it breaks 560 in the Qs, not only is it breaking above the volatility trigger, but it's going to take it above large gamma 1, the largest position, the largest gamma position on the short side, sitting at 560. Now, whether it was calls, whether the puts or combination, I don't know. But it was large. There was a large amount of gamma there, and just did not go through it. It blew through it. So it was an immediate reaction, and it did it on the opening. And that was the game changer. Honestly, that was the game changer. And here it is. Here it is, right here. See, 6 a.m. Pacific. So it's an hourly chart. And I'll drop it down to the 30, and we're going to go into that same mode. We're going to go take a look. 6:30. Look at this. That was breaking in the Qs. That was breaking above the volatility trigger, which slam dunked the risk on trade back into gear. Like slam it into the basket, and they just jumped and got and reinstated a lot of these positions that may have gotten taken out on Friday. So they were reestablishing, I think, a lot, plus what maybe needed to be put back into rolled. Now, and it sailed up through 560. And this, and it probably about maybe a third of the way, maybe even half of the way. And so I think if I noticed correctly, it was about 23,135, I think, on the NQ, and then it just started to go, and 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 it didn't stop. The first pullback was minuscule, and that's the other key. I got to tell you, I keep saying these are the signs when we're in risk on trading, which is what are they doing? They're selling the VIX, and then they're taking that cash and they're putting it into the volatility of the underlying. And what is the volatility of the underlying, Michael? What does that really equate to? It's premium. So they're buying the volatility. Volatility in the options equates to premium. How much premium is getting put into these options? What's the demand? Well, when that demand goes up, there's going to be more premium. Why? Because the dealer who's selling them, has to sell them, wants some insurance. Selling at fair value or even selling at minuscule prices when we are buying options that are not even close to being in the money yet. No, you want insurance. And that's what they get. And then they turn around and they buy the underlying. And then it just continues to rally. So our pullbacks are shallow. And then we get into this these are very small moves, but intense moves. They just kept going, small little pullback, and then they just come going right up until now. Now, what's bullish or bearish about that? Nothing. It's a function of the options trade. Now, yes, coming in and buying a bunch of calls, you're believing that the stock's going to go up, right? And so you want to be along the call. So that part, yes. But in terms of actually putting these positions on and what you're doing to hedge them, it's not necessarily being bullish or bearish. It's making a market. You sell the call, you buy the underlying. You lock it in, and therefore it's a function of premium, right? So if they're paying more for that call and you can get the underlying at the reasonable price of where it's at, then you're basically locking in your trade. And so, because a lot of times the trade doesn't have it, that particular option, that particular call might be trading for a dollar 50, a dollar 95 up into those areas, but yet it's still out of the money. So the intrinsic value of the option is zero. That doesn't have any. So the extrinsic value of the option, there's a ton. It's all of that balance, all of that premium. So in essence, if somebody's coming in and they're paying, let's just say, 150 on 150 strike, they're paying a dollar 95. Um, but for the option, let's see the option. And I just want to talk about. It's very difficult to kind of make up an example, but it's to say that the strike price of that option is above the market. It's not reached it yet. So the market is trading below. So what's intrinsic value of that call, let's say, right? That you're paying, you're buying a one a 215 caller, let's say, we're going to use Apple as an example. And Apple trades 203, trade 04. They're coming into 210 option, the 210 call for expires next Friday. Does it have intrinsic value? No, there isn't any. Why? Because it's out of the money. It's $7 out of the money. So therefore it has no intrinsic value, but yet someone's paying you $1.50 for it. Case in point. I got to do this because I wanted to show you that there really isn't anything behind it other than these options. That's the NQ. I don't want the NQ. I want Apple, which today. So we have the April the 8th, right? I'm going to come down. Two tens, 61,000 of these 210 options, 65, 66. So in essence, you're going out to pay 200, you're buying a call that gives you the right to buy Apple for $210 a share. And you're paying right now, because the volatility came down, you're paying 66 cents for that option. We'll use 65. Okay. So in essence, what you're paying is $210.65 for the stock. That's what you're doing when you go long that call. And I, as a dealer, turn around and purchase the stock for 203.50. You can do the math. That's the insurance. That could be the profit in the trade for the dealer. The stock has to go above 210 to be in the money. So you can give yourself these position, intrinsic, extrinsic. Go back to the 210 call. Intrinsic, none, has no value. All the way down to the 205s, none. It has no value. Because why? It's under the market. It's not in the money yet. This happens all day across the board in a lot of our products. So it becomes a function of the options. Risk on trading. They're buying the underlying volatility via premium. And the dealer is then having to turn and hedge by buying the underlying, whether that's the equity, the stock, whether that's the ETF, i.e., the Qs, the spiders, or it's the index itself, SPX, ES, NQ, NDX. And therefore, we get a rally that just doesn't stop because it's a continuous flow, it's a continuous cycle. And then so what happens? Volatility sinks, gamma builds up at these different levels, and we start to go through them, which pushes it even more. And the same thing when it starts to come down and we start to break them coming back down, as we did last week when we flew through volatility triggers. And what happens? Bam. Risk off trading equates selling. Risk on trading is buying. So that's really what was behind a lot of today and continues. So when Palantir comes out with these great earnings, you got to go buy the stock because they're going to come for the options later, maybe tomorrow. But there's going to be a lot of adjusting. If you have to be short, you want to get out. You want to start, balancing it out. Now, how do we want to take a look at this? I'm explaining what these moves are happening, and they're really, yes, some of it's bullish, some of it's bearish. I don't disagree with you on that, but the majority of it is the way that the options are trading and the cues. The cues they take the lead on days like today and last week because we start sailing through those same levels on the way down. Now we're going back up. They broke that 560, then they broke the large gamma. And what got left is they're now heading, if we continue to rise, they're heading for the 570 for the call wall. That's their next level in terms of, gamma that algorithms will head for. That's the next level where likely they're going to be able to buy in mass. Now, let's get back to the Elliott. I still think this could be, like I said, I'm going to leave it as marked A, but I want to be sharing with you that I don't know if it's going to be a minuet wave A or a sub minuet wave A. Using the sub degree does allow more time for all of this to unfold, which again fits my little bit larger picture. I'm continuing to think if the algorithms and just analysis is showing there's still strong potential that we surge higher, coming in and doing it today may be a precursor, and we still need to finish this fourth wave, and we may still need to finish the minuet wave A of it. I'm going to leave this in place as minuet A. I'm very, if I have to say, we kind of get an A, a B, and then what could be a C wave. It's true, and that happened basically most of it on Friday, and then the balance of it starting yesterday. So we kind of came in and we down and then just started to rally yesterday. So what could have been, I was looking for more to put in this fifth wave, didn't get it, and we ended up way up here. You have to put the fifth wave that this structure is complete. So I put it in there. Could be A, B, and this is all one big C wave. And then it could be minuet wave B. We have continued resistance at 23,433. That's the 0.618. For a B wave, also I think it actually might be the most common. 0.618 retracement for a B wave. Being that I counted 5 down, and I'm labeling it wave A, of what degree to be determined, but I'm labeling it wave A. Therefore, I'm not looking for it to go beyond this level up here at 786. I'm not looking for a flat, nor am I be looking for an irregular, unless I can change this somehow into an ABC. If I can turn it into an ABC, then this ABC could actually do that. It doesn't count as well as an ABC. So here we have the same dichotomy. What we're seeing in terms of what's getting changed on an Elliott basis according to labeling, but I still feel that it's 5, like 1, 2, 3, 4, and a 5. But this could get caught up in it, maybe it's not. And this was A, B, and then we get the C wave down. Could, all of these are could be's, not necessarily cast in stone. It's just difficult right now to actually count them out. So I'm doing the best. I'm saying it's 5, and it felt like 5. The way that it traded, just like this felt like 5, the way that it traded. Well, this obviously was a 3. Now we need to let it go more time. So if I had to say what we do tomorrow, I think if we really start to aggressively go above 23,433, it's likely in the Qs we're flipping it above 570. And therefore we'd then be heading for 575 to 580 in the Qs. We cannot discount that the Qs today were up 10. The spiders were up 9.5. Those are pretty big moves for those ETFs, I have to say. But then again, the cash in the NQ, NDX was up 425. The SPX was up 91, almost 92. Those are big moves in those cash markets as well. So we need to let this play out a little bit more. But we all need to be on our awareness level needs to be raised that this either could be all of it, right? Instead of, you know, 2 days to put in wave A, 1 day to put in wave B, would suggest we come down tomorrow. Not going to discount it, but there's our fibs should it occur. And we'd be looking for wave C to be equal to wave A. And guess what? That comes in at 22,270. Now you're going to go like, oh, hell no, that's not going to happen. I'm not going to disagree with it. But I'm saying, as laid out, this is what the fibs would tell us. This is if this completes the B wave and we're going to do a C wave down and we start to head down and we do it with the same fury that we got over here, well, then I'm going to be calling for this. Now, if we go up, blow out this, blow out that, then there's a possibility that it was A, B, C, wave 4, and we're in wave 5. Or it's an ABC and we're going to do a flat and then we take them down a degree. These are to be determined. And why, you might ask? Well, because these are the potential. To pinpoint exactly what this market is doing is not as simple. There are a lot of factors, a lot of things coming together. We got risk on trading, we got a good earnings report, et cetera, et cetera. Could the market turn around? Sure. It did it their day. Don't forget, on this day, the market went to a new all-time high before it decided to go down. What's to say it doesn't do it again tomorrow? Something else happens. White House comes out and says something else that the market goes, what? Okay, boom, we're done. And they start to cover going in the other direction. I don't know. That's the volatility that we're sitting in right now. But here's the potential. Here's the lines. Here's the levels that we may be dealing with. We're going to have to let the market be the market and do it. Now, you're a position trader. I get it. I get it. This is a rough time. And you're like, okay, what do I need to sit through? Well, that's up to you. As a day trader, plenty to do, except when it got real slow. Then, you stick on a micro. If you got a big enough account, you trade one mini and you just see what you can get out of it. Put your target up, put your stop in, and let the rest happen. Because sit and watch it can be really tedious. So again, this is long enough. Been on this thing now for a few minutes. So I do think that we may see some follow through to the upside. We may even get up to 23,616. But if it's a B wave, whether it's of the sub-minuet or the minuet degree, even if it's a B wave, I'm not looking for it to go much above there. I'm really not. Starts pushing above there, we're running not necessarily the risk, but we're running and increasing the probability that this fourth wave may be over. Or if it is an ABC, we're getting a B wave that could come in and actually be, I'll show you, that actually could be in terms of an irregular. And I'm putting those levels up right now. I know we're using them a lot, but trust me, this is kind of the way it is. They can get up here to new all-time highs again. We just had this conversation that this could have been, and also in terms of the other fourth wave, right? This fourth wave still being in progress, that would have been A, and this would have been B because this was 1.236. That high, 1.236, irregular B wave. But what does that suggest? We come flying down. Now, you want to talk about that one? Okay, here we are. We just flew up higher. So what would it suggest? If the other is in place, wave one, wave two, wave three comes down. What if, well, okay, what if it's just this one, this minute wave four, wave A, wave B, wave C coming off? And then you've got these. So either case, we have a high potential that we're going to finish this rally and we're going to nosedive again. Going to put a lot of confusion out there, but let's just keep all of this in mind. All right, my call. I do think we got some follow through to the upside, but my hourly chart's getting a little bit overbought. Moving averages, they're like, what? If we go out and we look at the daily, you're going to see these moving averages still in alignment to go up. Talked about it on Saturday. They still exist. They're still there. They still can move higher based on these moving averages. They did not turn negative. So this whole thing could be done, and we're running up, and we're going to get to a fifth wave. Or funny as it may sound, we're going to go out and we're going to have to look at this and think like, okay, what if I don't know how, but what if this third comes up to here and this is the fourth, but of the minuet degree? I would be like, what? It kind of gets out of hand. But I got to throw it all out there because the market's going to be the market. And I'm going to have to count it. And what would that suggest? That would suggest that this is minuet wave four. We still have a fifth wave up before we're done with the minute wave three. Maybe. These are my possibilities. Now, let's see what we get. Back down to that hourly chart real quick. Let's see what we get. We have markers. So you start to get above them, you can start to figure out, okay, we're likely going to hear if we go above there, then maybe I need to redo my upside targets for this minuet wave three. And boy, I tell you, that's pulling this one back in line, right? You're just doing extensions. You go from the low to that high down to that low. And then you're going to be looking at 1.618 on the upside. And I think you'll find that there's plenty of room for that to happen. And then again, we're up above 24,000, well above 24,000, heading up towards 25,000 before minute wave three is done. And that's a possibility, folks. That's a possibility. And you know why it fits now? Because of the speed this is all unfolding. If this comes down and it ends up being an ABC, and you watch me and look and listen to me as I went through it was confusing. So it could be an ABC, and we put a 4 there. 1, 2, 1, 2, 1, 2, and you count it on the way up. These are our choices. I'm going to trade it. I'm going to trade it using the Elliott. I'm going to trade it using the fibs. I'm going to trade it using the spot gamma levels. That's what I have. All right. I'm going to let it stop right there. I hope I'm bringing some clarity. I hope that I'm kind of just working this out together and how you want to look at it and what we need to pay attention to so that we can trade. All right. Next update tomorrow morning.